financials, which appear more...
Sean Quiliani detects fraudulent mortgage documents for the big banks. He's found a big increase in the number of people risking jail time and losing their homes.
I've opened up a payslip here, and if I click on the edit PDF, then I can easily sort of modify this PDF file. You can change the dates, you can change the financials, change the gross income, taxable income, and of course the net income.
Since interest rates started rising, he says there's been a threefold increase in people lying on their home loan applications.
If you put yourself in the shoes of a prospective borrower who might be trying hard to get onto the property market and put a roof over their head, it's a decision between telling the truth to the lender and potentially not getting access to the credit to get the property.
The increase in attempted liar loans comes as hundreds of thousands of Australians are looking to refinance as they hit a mortgage cliff, rolling off low fixed rates to higher variable rates. Under rules imposed by the banking regulator, banks are supposed to assess a borrower's ability to repay a home loan at 3% higher than the current interest rates on offer. But some lenders are applying lower buffers of 2 or 1%.
These policies are really approached on a case-by-case basis. They'll be very good borrowers. They would have met their repayments and they are well placed in terms of other aspects of their finances.
When Alicia Watson and her partner went to refinance their home loan, they were assessed at a lower rate. The couple have been cutting costs and making extra repayments.
We budget quite stringently. I've got an Excel spreadsheet which is just wild, and basically it does to the very cent of what everything in our life costs.
When they bought their home in 2020, they were offered an almost $1 million mortgage, but took out less than half of that.
There would be under no circumstance that we would be able to afford a $950,000 mortgage at this stage, not with the interest rates that they are right now.
Melbourne-based mortgage broker Philip Robertson says many people are trapped in mortgages they can't afford and more likely to take on riskier personal loans when they can't refinance.
Their situation and their circumstances would be so much better if they were able to perhaps go interest only for a short time, change to a lender who had a low rate. That would relieve a lot of stress, especially on people who are more vulnerable or lower income people.
With market expectations of another possible rate hike in 2024, more Australians are likely to hit financial stress. While the number of people defaulting on their home loans has been low, there are fears this could shoot up as rates stay higher for longer.
There are some job losses, then that will tend to see arrears push higher as well. That will flow through over the next 12 months. To the extent that that then flows through to mortgages in possession, that'll tend to be the back end of next year.
While banks are becoming better at detecting fraudulent documents, Sean says it's an ongoing battle.
Fighting fraud and creating a safe environment to transact around mortgages is something that it never ends. It's almost like a cat and mouse game.
A game that could continue to play out as more Australians face tough times ahead.